Steve, so much of what I read over the weekend was this 180 that people think the Fed has done at this point and trying to get their heads around that.
Yeah, now that they've done the 180, Becky, they're now going to be traveling in that direction. A major shift, as you say, is underway at the Fed that amounts to the beginning of the end of this massive pandemic easing policies. The Fed not only likely to speed up the taper of the December meeting, but could begin discussions at this meeting and in subsequent ones about a series of steps to remove accommodation, perhaps earlier than the market has priced in. Among the issues that will be or could be on the table soon, obviously the faster taper, and then how soon to hike, how fast to hike, and even eventually the thorny question of balance sheet normalization that would be potentially reducing the size of the balance sheet. The pivot comes as concern about inflation has now taken center stage among even the most dovish Fed officials. It's clear that a faster taper is a means for the Fed to have flexibility to enact rate hikes sooner next year. If the Fed goes to a taper pace of $30 billion a month, double the current rate, it could be in a position to hike rates as soon as the mid-March or early May meeting. So gaming out options would need to begin soon. St. Louis Fed President Jim Bullard said Friday that he wants to get to live meetings for possible rate hikes as soon as possible. No Fed official, including Fed Chair Jay Powell, has pushed back on the market pricing for 2 rate hikes next year. Currently, the market's priced in the first hike for June and more strongly in September. A second hike is gauged likely by November. You can see that on the right side of your chart there. Public comment suggests Fed officials have not made up their minds yet about when to hike. Decisions will come meeting by meeting and be based on the economic data and, of course, the path of the virus. But it looks likely that debate's about to begin that would give the Fed flexibility to hike earlier than timing currently priced into the market, Becky.
Steve, the timing is weird on a lot of fronts. Right after they kind of made this pivot, we got that weird news on Friday. We've got the Delta with the unemployment report and the household number. And then you've also got the variant, this new Omicron variant that we just don't know a lot about yet.
Yeah. You know, I think the part of the big news last week was Fed Chair Powell saying, you know what, a new wave or a new variant is more likely to be inflationary than it is to affect demand or create weak aggregate demand. That's been the way the Fed has looked at virus waves each time. This time now, it's like he's more worried about supply and inflation. That's a big part of the pivot that's out there by the Fed.
It is, and that makes sense, too, especially watching what has happened with wages and with trying to get people back into the workplace, too. Yeah, it gives us a lot to think about on this Monday morning.